And that's a huge point that I always keep making, right? Which is that we are going on a 100-day plan and not a 100-year plan. When you think about how much 5 years looks like to you while you're living it versus what 5 years is in financial history, like you said, God forbid we go into geological history, right? Which is a completely different maxim. But I guess my point is this: if you think that the equity markets are going to eventually suffer this fate, which will occur over the course of whatever it takes, decades, maybe centuries. I don't know how long it's going to take. That is also probably a smaller cycle than we're seeing also too with the currency, right? I mean, don't you feel like the currency is just a failed experiment waiting to happen as well?
Well, I think the policies that just because it's a paper currency doesn't mean you have to behave irresponsibly. I mean, look at the job the Bundesbank used to do, before it went, I mean, I know it's still in existence, but it's not running monetary policy for its own country or for Europe, right? We have the ECB. The Bundesbank did a good job. They understood the consequences of the warpage that comes out of bad monetary policy because of what happened to them, in the 30s, the hyperinflation they experienced, and they behaved rationally. And look, even before Greenspan got here, look, Volcker, most people probably don't even know what Volcker did. They certainly didn't live through it when he broke the back of inflation by saying, look, we're going to focus on the amount of money that we the monetary base, the amount of money in the financial system, and we can affect that. But he focused on that rather than the price of money. The price of money being interest rates, the quantity of money being the size of the M's, the monetary base, and those measures. And they broke the back of significant inflation. And then slowly but surely, we've gotten more reckless all along the way, and now we're about as reckless as you can get. So the pendulum is going to go back in the other direction. We just don't know exactly when. But it's not going to be 100 years. I don't even think it'll be 10. I mean, we're at the end of this phase of the experiment. We tried to exit QE, couldn't. The other guys didn't even get a chance. So now when things go bad, we don't know what things we're going to find out we didn't know were going on, and what kind of problems exist. And somewhere along the way, psychology will change about the tactics and people may say, look, these central banks aren't going to change their ways, but we know it's leading to this, and they'll have a preference for gold, or maybe the hardest thing to break is the fixed income market because they're anchoring it, so you can the banks and those kind of institutions can play the yield curve. So it's hard to break the back of the bond market, but eventually that's what'll happen.